Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTWSYS 008 traders. The title of this video is how to swing trade on 2-day charts using the RSI indicator. This is part 5, all right? If you have not watched part 1 to 4, we recommend to traders to watch them first before watching the 5th part, okay? In this video, we're going to look at a bearish trade setup, because in part 4, we were looking at a rising channel, okay? How do we sell, okay, using the RSI indicator in a declining channel, all right? What do we need to pay attention to avoid the RSI trading mistakes, all right? So I'm now on the 2-day chart of the euro-dollar currency pair. Though we are looking at the currency pair, this strategy is valid for indices, for ETF, and also for stocks, all right? So you are trading commodity, futures, whatever, okay, it's still valid. So 3 points we need to draw a channel, as I explained to you already. So for a declining channel, we are looking for a high, followed by a lower high, okay? All right, but there is a pattern here. So once we see a high followed by a lower high, we draw a bearish trend line. So this is the bearish trend line, okay? And then we select 1 point here and draw a line that is parallel to the first one. Then we have the bearish channel. What are we looking for? We are looking for the price to display a lower low before retesting, okay, the upper side of the declining channel. If the price does not display a lower low, see there was a low here before this lower high. If the price does not display a lower low before retesting the upper side of the declining channel, it is not very bearish. The reason is the lower high after this low here is an invitation to sell. But as the price going down, if the price fails to go below the previous low, which is this one here, if it fails to go below the previous low, it is not very bearish. We need to be careful. All right? A low, a lower low. All right? In a downtrend, the price might display lower lows, lower high. So if we have a low in place, all right, and we have a lower high, the price must break the support to confirm to us that the bearish momentum is strong. If the bearish momentum is strong, the price will be breaking support level. That's why it's so important for us for the price to display a lower low, a low, a lower low before retesting the upper side of the channel. So this one here is a bearish trade setup. We will not enter the trade on a 2-day chart. We apply the top-down trading method, the setup, the signal, and a low-risk entry point. We are not trading the RSI indicator, we are trading the price, okay? Once the price retesting the edge of the trend line, what do we need to look for? We will look for a key resistance zone. Do not forget that. You are trading a trend line, you are on the edge of a trend line. Is the price at a key resistance zone or key level? Go to the higher time frame to search for those key levels. You don't want to sell, even if though this is on the edge. We want it to be on or near a key level. See here, went up, touch it, pull back a bit, touch it. So a bit of okay, resistance here, all right. This is the line I'm talking about, the horizontal line. If we switch on the 2-day chart, let's go for instance to the weekly chart. Is the key level on the weekly chart, all right. It's not very clear to us, but there are more to this. If we start projecting channel, you will notice that this is a hidden, okay, key level, all right? Or if we start using Fibonacci, okay, you remember what I said to you, that the Pitchfork tool, the Fibonacci, okay, extensions, all right, and the market geometry allow us to determine hidden support and resistance level. You see here, I've drawn a Fibonacci extension, and you can see that this level here, where I draw the horizontal line, is the 161.8% Fibonacci extension in relation to the move from here to here. Multi-talented trading, use the Fibonacci extension, go to www.dayprotraders.com, click on Fibonacci extension to learn more about Fibonacci extension. So this is a hidden key levels, all right? And the price retesting here. Good. So we have, okay, a resistance zone, and we have a bearish setup at a resistance zone. The mistake that a trader will make at this point in time, a trader that is on the 2-day chart can make in this scenario, is the mistake that a trader can make if he or she, all right, forgets to check the higher time frame, or if he or she, all right, is trading only this declining channel on a 2-day chart, but did not bother to check the market pattern on the higher time frame. We don't want the market pattern on the 2-day chart to conflict with the market pattern on the higher time frame. I don't want to repeat myself because this video is a short video, so you need to watch the previous video to understand what I meant. So on the weekly chart, before, in the previous videos, we talked about this low, a higher low, and this high here. With these 3 points, we draw the red line on the weekly chart. Okay? Though the blue line, the blue channel that we see now is where we want to trade. We want to sell now here. We were here, all right? The price at a 61.8% Fibonacci resistance level. It's a hidden resistance level. The price has displayed lower low. Before displaying leaves the lower high, we will wait for the common center line to be kaput. But you see now, the market pattern on a 2-day chart is declining, but the market pattern on a weekly chart is rising. The price where we are about to sell is close to the lower part of this. It's the lower part of the edge of this rising red channel. So there's a conflict between our market pattern and the market pattern on the weekly chart. In that case, what you need to do is here. The price was going up before. Is the trend line broken? Yes, the trend line is broken. It's broken and retested here. All right, it's broken and retested here on the weekly chart. So price was in a rising channel, but the common center line is kaput, and the price now in a declining channel. But we don't want, if like myself now, if I want to sell it here, I need to be careful. So I will ask myself, where is the first and nearest support level? Is there enough room for the price to go down? If there's not enough room, I won't take it. I'll look for another setup that will make more sense. Okay, it works here when it manages to go below it, but it's a tricky place because we are very close to the lower end of the rising channel. The bull may challenge our trade, our bearish trade, and mess up our trade. We don't want a situation where we want to swing trade and we want to sell, swing trade at the same time when the bullish trader, a bullish trader is also thinking to buy at the same place. We don't want that. We want a place where if you want to sell, the bulls, okay, are not very excited to buy at that region, okay, in that region, all right? You understand what I meant, all right? So that's why it's so important that we sell at the best place where the bulls will not be very enthusiastic to buy, all right? They don't want to mess up our trade. But here you can see that we are very close to the edge. Some bulls may decide to challenge the price or buy here, all right? You understand? But one thing you have to know, though we are very close to this edge, the common center line is broken. You're on the edge. You are selling here. You know that it's close to the edge. You want to keep your eyes on it and know where you are and what is likely to happen. And if the music has changed, you are coming out quickly. All right. But always, you are using a channel. Do not forget the horizontal market pattern. So here, though we have a declining channel on the 2-day chart, on the higher time frame, we have a rising channel. The market pattern on the 2-day chart is conflicting with the market pattern on the higher time frame. So some traders may consider this as a short-term fluctuation to the downside, all right, until we see a clear-cut resistance, okay? But again, anytime you are about to sell, all right, ask yourself, why am I selling? What has happened before? So the market was going down before. This is very, very important for traders. It rallied up to the cycle point. See, this is a cycle point, all right? went back to the starting point in the same zone almost. All right, same zone. All right, this bound here, but couldn't go because normally if the price, you see, it went down, it turned around. Okay, it's 180 degree. It goes back to the cycle point. So at this point in time, if a new cycle is about to begin, you break above the cycle point, retest it, and then boom. But it fell. This is a weakness here because this is an opportunity for the bull to bring it above the cycle point to find a support. So trend line is broken here. Another thing I need to mention to traders here for selling, though we are looking for the third time when the price retests in the trend line, okay? All right? But sometimes you don't want to wait for the third time because you can see here, so there was this high, we can sell at the second lower high, at the second high straight away. Why? Here. Because the common center is broken, the price D below it, and was retesting here. This setup along this trend line is offering us a low risk entry point. Normally, we should wait for the third time when the price is touching the lower part of the declining channel. But if a common sense trend line is broken and the price retesting the common sense trend line is a bearish trade setup, again, do not enter the trade on a set time frame. You must use a top-down trading method. Do not violate the trading triangle. Pay attention to the economy news and the fundamental if you are a swing trader. All right. So we can sell at the second high straight away. If the common central is broken, prior testing it, we use the top-down trading method to enter the trade. But the most conservative place is the third time. So one first high, lower high, display lower low, and then retesting here. It's a bearish trade setup. You want to sell, ask yourself, are we selling at a resistance zone? Here we are at a 161.8% zone. The market pattern on the 2-day chart is bearish. Now go to the higher time frame to see whether the market pattern on your setup time frame is conflicting with the higher time frame setup. Are you at the support level? Are you on the edge? You are buying on the edge or selling on the edge of a trend line. Look for the horizontal resistance level. Let's go back to the 2-day chart. All right. Hope you are learning something from this to avoid trading mistakes. So this is where we are. So if we stop on a daily chart, we won't see that on the weekly chart we have a rising channel. So here it managed to go through it and even come back down to the next support level where traders are now is consolidating like this. It makes sense. All right, it makes sense. It is also powerful. Okay, this line is the overbought zone. Is this one here? Is here. So the point where we are selling, the RSI indicator, okay, is coming very close to the level of 70. That's the zone, very close to it. But as I explained to you, the RSI overbought is just pointing to us a resistance level. We look for it. The declining trend line, resistance level. That's what it's pointing to us. Resistance level, okay? It's pointing to us the resistance on the edge of the trend line, resistance, normal horizontal resistance. It's pointing all kinds of key level for us when it's overbought or oversold. Now, if it's overbought, you draw your warning line. Okay, how to avoid RSI trading mistake. Check that video. If you break above it, it's overbought. You are not trading the RSI. If you are trading the RSI, all right, you will sell the RSI and go down, and the price will go up instead. If the price break above the resistance level and find a support, we will buy, even if the RSI is overbought, because we are not trading the RSI. Because if the RSI is overbought, the bullish momentum is strong. That's what it's telling us. So if it's in a resistance zone, in fact, RSI overbought, in overbought zone, is telling us the bullish momentum, the magnitude of recent gain are superior to the magnitude of recent losses because it's above the level of 50. Now, it's also telling us, but we are at a resistance zone. But because the magnitude of recent gain are superior to recent losses, if the price break above the resistance and find a support, the bulls are winning. Okay, we do not sell just because the RSI is overbought. Okay, so if you are applying this strategy, sometimes you may not see the RSI may not be overbought. So don't be afraid. The RSI may not be overbought. It may be hanging somewhere here, but the price will be on the edge at the resistance zone, and do not be afraid to consider it as a bearish setup. But the most important is to avoid mistakes. Use the top-down trading method. Always break it down and pay attention to the economy news the fundamentals at Google Finance, perform at least the Google Finance acid test, check it out, adjust to your channel. Okay, this will help you to improve your swing trading. In order to achieve consistent swing tradings, okay, one should always, okay, this is the end of this series of video, one should always, okay, adhere to the 3 market pattern. Ladies and gentlemen, whether you are on a daily chart looking for your setup, or weekly chart looking for your swing trading setup, or yearly chart looking for your trading setup, do not violate, okay, the 3 market pattern. This is critical. The next thing that you do not want to forget is the trading triangle. So, for instance, if I look at a stock, okay, talking about Apple stock, for instance, I want to swing trade the Apple stock, okay? The Apple stock is listed on the NASDAQ 100. The NASDAQ 100 represents the group to which Apple stock belongs to, okay? But again, it's American stock. If we are talking about the trading drill, the market first, the sector before the individual financial instrument, whether you are in Hong Kong or you are in, China itself, mainline, or you are in Tokyo, or you are in London, when we are saying the market, the trading drill, we are talking about the S&P 500. Is the S&P 500 rising? Is it bullish? Is it at a resistance zone? Is it a support zone? What's happening with the S&P 500? We are trading first the market. So what is the global market environment? Okay, you may say to me, George, it's too much. Just be aware of it. Even if you don't want to use it, be aware of it. Market is bearish. If that's enough for you, okay, know at least that the market is at the resistance level is bearish. Great. That's it. You know, okay, you know that the S&P 500 has reached a key levels, all right, and you know, all right, the S&P 500 is pulling back on the edge of, trend line. Where is it? Check the bigger picture. Where are we? Especially the yearly chart, okay? So what is the market environment? Major economy news will change the dynamics of the market. So if they have a job, they don't have if they have excellent job creation, which is released at 1:30 p.m. London time, before New York is open at 2:30 p.m., the market will be bullish. The market certainly is bullish. You want to know. It's about the market. Now, your attention now, because the Apple stock is listed on the NASDAQ 100, we consider the NASDAQ 100 as the group or the sector, so to speak, that to which Apple stock belongs to, or the tech sector. Okay, NASDAQ 100 is the tech group, all right? What are the market leaders in that group? Go to www.dayprotraders.com, click on Market Watch. The market leaders can change the dynamics of the sector and the market itself. In fact, one should always pay attention to the market leaders. You are trading forex, pay attention to the Euro USD and also the dollar Swiss franc currency pair. The Euro USD is also positively correlated to the crude oil. All right, so you want to understand the market indicators. This is about Market Watch at Dayprotraders.com. The market indicators, okay, the market leaders. All right, this will influence the market. Now, again, coming back now, so you see the market, you see the sector, the group to which the stock belongs to, or the financial instrument belongs to. Now you concentrate on the stock itself. What we are doing here, this is about the individual financial instrument itself. So we haven't looked at the market, we haven't checked the group and other things. We are just analyzing the stock. Most of the swing traders will stop here. They will only analyze the individual financial instrument. They don't want to know about the market. So the market may be very bearish. People will go and place a lot of bullish trade. And they will end up losing because the market is bearish. But people go because they are bullish. They go and look for a lot of bullish setup. Yes, these are valid bullish setup, but they fail just because the market sentiment has changed. The market itself is bearish. It's like, all right, you have, a healthy seed. Okay, you have all the ingredients, the water, everything, but you are in just not the right season, okay, to sow that seed. All right, you sow it at the wrong time. This is the same thing. So you have two watch lists, a bullish watch list and a bearish watch list. So depending on the market environment, especially you keep eyes on the market leaders. Suppose you are trading stock on NASDAQ, you check the market leader, Google, Apple stock. What are they doing? They are heavy weighs. So they will weigh on the market one way or another. So you see the market leader is very, very bullish at a low risk entry point. All right, we go into that group. We're looking for the bulls. If the market leaders are bearish, okay, we want to follow, okay, the market leaders. So we will, in that case, we will focus on our bearish watch list. Give priority to our bearish watch list. All right. And then if the market is more bullish, we will give priority to our bullish watch lists. All right. So you will do all this kind of exercise. Okay. This is not the whole thing that you need to know about, okay, how to swing trade. But with this information about how to swing trade on 2 days chart, part 1 to 5, you are, okay, on the right path to start improving your swing trading if you are using the RSI indicator. When the RSI is overbought, it's just pointing to us a resistance level. When it's oversold, it's pointing to us support level. If that support level is kaput and the price find a resistance below it, we will sell instead when everybody else is trading the RSI buying and the RSI is not going anywhere. Okay? This is the end of this series of video. I hope you have learned something from it, okay? I will put it into use, okay, to make excellent swing trading decisions. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders, closing this series of video about how to swing trade on 2 days chart using the RSI indicator. If you like this video, give us the thumbs up. If you dislike it, please give us the thumbs down, but put a comment below and to explain what is happening, all right? If you love it, share it on Google+, okay? On Twitter and also on Facebook. We wish you the very best in your swing trading. And until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders. Speak to you soon.